Hi everyone, welcome to the TBR Webinar series. Today, Practice Manager Allan, Senior Analyst Cassandra Mooshian, and Meaghan McGrath, and Research Analyst Jack McElwee will be discussing 2018, the year multi-cloud and hybrid cloud become inevitable. Before we get started, we have a few housekeeping notes. At the bottom of your screens, you'll see a series of buttons. From left to right, you can access the slides, audio controls, Q&A, speaker bios, our survey, and social sharing. After the webinar, you will receive an email with a replay link, as well as a link to view and register for other TBR webinars. If you have any questions for us, please submit them via the Q&A widget in ON24. You may also reach out to us after the event at webinars@tbri.com. Thank you again for joining us, and here's Allan to begin the webinar.
Great, thanks, Sarah. And thanks everybody for joining. So we're here to recap some of what we're seeing as we close out 2018 in terms of the cloud market. I have a number of analysts here to join me, Cassandra, Meaghan, and Jack, and you'll hear them each contribute throughout the presentation. So to get started in terms of what we see overall as we close out the year, we call out here that both on the customer side as well as the vendor side, we're seeing many more steps taken towards maturity. And that's kind of a broad, boring statement, but what I wanted to lay out is what we've seen settled in terms of the overall cloud market. And there's a couple things. These themes will resonate throughout the presentation, but I'll go through them as we kind of look at the market overall. So first of all, not all things are moving to cloud. I think that's been accepted for a while now, but it's just being reinforced as we look at the decision making amongst customers in terms of things that will either be refreshed in a traditional model, on-premise, migrated off cloud solutions back with cloud repatriation. We do see some of that activity, or workloads or use cases that will continue to remain in their existing non-cloud delivery methods. There is a sense of settling out in terms of what's suited to cloud and what's not. Secondly, that there's not going to be just one cloud. And that's not just for the infrastructure platform or software markets. It's really overall. Even if you look at the most consolidated market being infrastructure as a service, we're seeing a lot of customers looking for that second or third option in terms of infrastructure as a service platforms and mixing with existing on-prem to be able to have some flexibility and to really operate in a multi-cloud environment. It's even more pronounced as we'll go through in the software as a service space. Next, that wholesale migrations and this concept of overall digital transformation is not going to happen for most organizations, the vast majority of organizations. That these quick transformations are really non-existent, and for all of these decisions, there is a lot of evaluation, business model change, process change that just prevents these real quick hit overall transformations for most customers. Next, that while shadow IT has been a big theme throughout the beginning stages of cloud, IT is becoming more important than ever as the maturity increases and the use of these solutions changes from transactional, siloed to much more concerted, centralized, and strategic for a lot of these customers. So the IT organization we see playing a much bigger role in the new type of cloud adoption that we're seeing in the market. And then lastly, that long migrations to new cloud platforms, year-long implementations, all those are really non-starters for customers. They're looking for more incremental, quick value that leverages a lot of what they have in place today, but extends that with new capabilities that can be delivered via cloud and start providing value, within months, if not weeks, of their implementation, and not looking at such long timelines. I think that's a big shift in the overall IT space. It'll be interesting how that changes as more ERP core workloads start to transition more to cloud. But right now, certainly that incremental value and shorter timelines is what customers have been looking for, and vendors are coming around to the same point of view. So we certainly see a lot more alignment between the two sides of the market on all of those themes. For today's presentation, we'll go through a little bit more on what's happening in terms of the consumption, how these hybrid, out-of-the-box hybrid and integrated solutions are becoming very, very commonplace in the market, really kind of a requirement in a lot of ways to adopt more cloud solutions. And then we'll also go through the vendor side to look at, for their strategy around hybrid, how are they accommodating and enabling customers to adopt more cloud solutions given all of these mandates in the market for the type of value and the type of implementations that we're looking for. And then lastly, we'll hit on some of our expectations as we look forward into 2019 about how some of these will continue, but a lot of how we think change will continue to occur as we look at another year. So we'll start here just to kind of recap for the, some of where the market's been, starting with the public cloud adoption, very transactional, unsanctioned. So there's a lot of terms that we could use as we look at the overall space, but really I think the consensus from customers as well as all of the vendors that we interact with is that whatever you call it, Cloud 3, 3.0, 2.0, it doesn't matter, is that it's definitely not Cloud 1.0, that there's a lot of differences in the market in terms of both the types of solutions that are being adopted. As we said, moving a lot more into the hybrid cloud, which is the multi-cloud environments that are integrated, and then certainly a lot more adoption around hybrid IT, which gets to the concept of leaving some existing assets in place and then leveraging cloud to extend and complement those, but not necessarily doing a full-sale replacement. And then the shift to unsanctioned to sanctioned goes to the concept of IT playing a much more critical role for this non-cloud 1.0 type adoption, where they're really the enablers for these integrated solutions that are really what customers are more and more looking to as they think about their next transition or addition of cloud services. So one of the more important aspects of this change in market runs along the bottom, where the barriers and also the value propositions for a lot of cloud solutions have changed, where it may have been lower cost to begin compared with some of the traditional legacy IT solutions that were in place. Cloud was a great way to make a shift financially and operationally for how things were sourced, but that even in a lot of conversations now, cost is not the primary driving factor for the decisions that they're making. They're looking at some of the ways that they're going to manage the complexity associated with what they have today and what they're going to add through additional adoption, changing the culture, both within IT and the business organizations, and in some way going through a transformational process where they're not just implementing new technology, they're changing the underlying business process. And like we said, that doesn't happen in a wholesale fashion, but it is happening decision by decision and in use case after use case, where it's very specific, targeted, and they can start to demonstrate the value that is arising from those new implementations and justify those new investments. So that sets up kind of the market overall, the trends that we saw in 2018. For more on the multi-cloud trend, I'll hand it over to Meaghan McGrath.
Thanks, Allan. So I think sort of building on the idea of sort of themes we've seen that have been accepted and are continually being reinforced, something that we've been seeing over the last, particularly 2017, I think, and 2018, has really reinforced that, is the platform and infrastructure markets really consolidating around sort of the 5 most prominent public cloud vendors in that space. I think Allan alluded to that customers are becoming very comfortable with the idea of they're not deciding sort of on just one cloud. They're looking for across the spectrum of different clouds, and that really is most pronounced in the SaaS market, where we're seeing customers look at multiple vendors, and we're seeing a lot of multiple vendors succeed in their discrete product areas, but we're really seeing that the platform and infrastructure market, or especially the infrastructure-led engagements, are really going to consolidating around these top 5 vendors. You can see those vendors listed in the graph on the bottom right. And I think, again, another sort of reinforcement is it's no secret that AWS really dominates the public cloud platform and infrastructure market in both in revenue and mind share. But that's not to say that there's not opportunity for those other 4 vendors to grow rapidly and to gain mind share. And I think that opportunity comes not from those competitors beating AWS in any sense to win a certain account, but we're really seeing that these vendors are focusing on coexistence and winning certain workloads. So it's not so much about winning the whole account, it's about winning a workload. And so this is coming as customers better understand the benefits and drawbacks of different vendors' offerings. The conversation has really shifted from asking which cloud vendor is best for my business to now asking more along the lines of which cloud vendor can best support this certain workload in question at the moment. And that's really sort of running alongside that idea that Allan brought up about looking for sort of those incremental projects that add value and short timelines. You're not looking for your entire cloud transformation. You're looking at sort of what's the next step, what next workload can we move, and what's the most logical vendor to support that workload. And so as this has evolved, we've really seen that overall infrastructure and platform environments are already very much sort of multi-vendor environments within customers. But as you can see in the upper left-hand graph, in our semi-annual surveys, we're still seeing about a third of respondents still expect to increase the number of vendors that they will be using over the next 2 years in this space. So vendors that can effectively message their ability to really serve these distinct customer needs in harmony with other vendors' environments or offerings will be really well positioned to capture market growth over the next couple of years. And so you're seeing that in the lower right graph as we project out sort of these top 5 vendors' revenue growth through 2022. And so you can see in these projections that AWS will grow modestly from the little growth dots you can see on the graph. And with that, it will protect its existing market share. But we really expect Microsoft, Google, and Alibaba will all grow faster than AWS and will not take AWS's market share, but take residual market share as part of that growth and as part of being sort of the second or third or even fourth cloud vendor in customers' environments. In particular, we really expect Microsoft to be best positioned to embrace this sort of second cloud position. And as such, Microsoft will pretty much double its share of the public and private PaaS and infrastructure cloud markets over the timetable in this graph. So with that, I'll turn it back to Allan to just tie up this section.
Okay. So here we look at some of the dynamics in the software as a service space, looking at the vendor span, some of the decision making for customers, and really it's a quandary in SaaS where it's going to be becoming even more of a large market in terms of the opportunity, fast growing, but also actually one that's difficult to target. And I think a lot of the dynamics for this space have been underplayed compared with the infrastructure as a service space, where over the past 3 years you saw a very kind of public and visible AWS closing down multiple different second-tier providers based on the level of investment required to keep pace, their momentum in the market, just a very difficult market to compete in. And so you saw a lot of vendors running the span from telcos to other cloud providers, eventually, most recently, Fujitsu closing down their infrastructure platform to a large degree based on the competition in the market. A lot of that is also occurring in the software as a service space. Instead of the amount of investment in infrastructure and data centers that is dwindling, it's the level of innovation required. So for a lot of the leading providers, whether it's Workday, Oracle, SAP, the amount of acquisitions and R&D that are being funneled into those software as a service portfolios is in the tens of billions of dollars. And very few vendors are going to be able to keep pace with that level of innovation. There is, on the other end of the spectrum, a very healthy startup community in terms of new services coming online that will, continue to make this a very difficult market to corner and target to a large degree. So if you look at some of within that, what's going on, so certainly the broadening consideration for customers, much more willingness to consider and implement software as a service solutions, beyond just the core collaboration. Started with CRM, but certainly HCM financials are becoming second nature for customers to consider and adopt based on use cases and proof points within their industries and with those proven providers. So that's good news for a lot of these vendors, that certainly customers are more open to considering and adopting software as a service solutions than they have been in the past. With that consideration, though, also comes this, it says expectation, but I think it's really a requirement for integration, that given the types of implementations where they're larger, they're more through the centralized buying functions rather than shadow IT, that's a shift. And it also has to extend, as we talked about before, extend some of the legacy assets that they already have, and those could be on-prem or existing software as a service cloud applications, that there's this expectation for things to work together and to provide a more holistic solution. And so things like, again, IT wants to help there, I think, more than they have in the past, but they need tools and monitoring solutions to make that happen. And so there's just more complexity. It's not just implementing an application, it's integrating it and managing that over time to ensure that performance levels are met. In terms of the provider space, I don't think, despite the consolidation that we believe will continue from some of the larger providers looking to accelerate their traction in the market, because it hasn't been an easy go for some of the larger application providers to just either roll out their own solutions or acquire them and get to scale in terms of the revenue growth, aside from a couple of vendors like Salesforce and Workday that really have continued to sustain that expansion. For the Oracles and the SAPs of the world, they're going to continue to acquire, but there's also all of these niche providers, whether it's regional, functional, even getting into more capabilities around best-of-breed functions within overall ERP suites, or even within specific areas like supply chain, that providers that can provide differentiation based on the innovation and the IP are being evaluated by customers from what we hear, and we think that will continue. So best of breed kind of wins out, even as some of the larger providers look to deliver a more end-to-end portfolio of solutions in certain areas. It'll remain fragmented for quite some time, which makes it all the more difficult to see that consolidation down to a leading list of 5 providers. It's going to remain in the thousands in terms of who's playing in this overall software as a service space. So that gives you a sense for market overall, some of the dynamics for both the customers as well as how vendors are reacting. But to go a little bit deeper on the vendor side, I'm going to hand it back to Meaghan.
All right, thanks, Allan. So on the vendor side, we've really seen that enterprises have embraced and become more comfortable with hybrid cloud and hybrid IT environments. And there there are really a few different dynamics from the vendor side that we wanted to look at. A lot of this information is covered in our hybrid benchmark, so the next few slides in particular are from or sort of inspired by that benchmark that we'll be talking to. But just to give you guys a little bit of a setup first, because I know that hybrid as a whole is a very broad space, and so we wanted to set up sort of how we're looking at that space, at least from the vendor side first. So in our hybrid benchmark, we split the market into hybrid influenced revenue and hybrid enabling revenue. And so there are vendors that span both of those camps, but the real distinction is that on the hybrid influence side, we're looking at any workloads that are integrated to the point where they are sharing data. So if it's a legacy application integrated with a cloud application, or even two cloud applications integrated, I think probably the most tangible example is something like your Office 365 suite. If there's an integration between the Outlook and Salesforce, where customer data is shared from your Salesforce app to Outlook and vice versa, that would create a hybrid influenced situation as we look at it. So the other side of that is sort of the hybrid enabling market, which Cassandra will dive into a few slides from now. But those really encompass tools that are directly targeted at enabling hybrid environments. And so integration platforms, I think, are the most tangible and example of those. So I just wanted to lay that out there so that you sort of understand what we're pointing at. As we go through these slides, I think we'll be looking at one side of the market or the other. So just wanted to lay that out first. So looking at the hybrid influenced side of the market, this, I think, is a really good representation of one of the ways we look at the different dynamics in that market. So but before I jump into sort of the arch here, one interesting dynamic on the hybrid influence side is that many vendor solutions are really almost inadvertently included in hybrid environments, and that's as a result of integration of solutions sort of across the stack. So this is something that Jack's going to dive into, I think, in the next bubble slide. But for many of the traditional software vendors whose solutions remain pervasive across enterprise IT environments, like Oracle and SAP, who you see on the left-hand side of this, customers and vendors have really created points of integration that are driving these vendors' involvement in hybrid environments, even if they're not really marketed as hybrid solutions at their forefront. And so the flip side of that, which is not necessarily in conflict with that, but just sort of the other side of the coin, is that these vendors and other vendors are also very deliberately pushing hybrid strategies where the vendors are sort of building de facto hybridization to increase their relevance in these environments. So on this spectrum, what you see here is sort of another cut of the hybrid influence market. And on the left, you have the applications or SaaS-led companies like Salesforce, who are integrating their applications across their own suites to create value and cross-selling opportunities. And so you can see sort of underneath the left side of this arch, we kind of detail what this internal-led strategy is. And so while this tactic is most prominent in these vendors, these same vendors are also integrating their applications with other leading applications to maintain relevance, and they're providing platforms to help customers even further extend and integrate their solutions as part of broader hybrid environments. But still a very deliberate hybrid effort on sort of the left side of the spectrum. And so moving along the arc, you come across vendors with a more sort of multifaceted strategy. I think Microsoft is the epitome of success on this front, where they're engaging with customers sort of with their integrated SaaS options, but also with infrastructure and platform workloads that support custom and multi-vendor solutions as part of hybrid environments. And so as we really move past the crest of this, we get into the camp of vendors that are largely partner-led, in that these vendors are either hosting or physically integrating workloads. So AWS is really an inadvertently hybrid vendor, where its ecosystem of technology partners are providing workloads that utilize AWS resources and are by sort of customer directive integrated with other workloads. Similarly, sort of AWS's consulting partners handle the bulk of direct integrations between workloads across both AWS resources and other cloud resources and on-premise. And so those integrations all create sort of these hybrid environments. One of, I think, the most interesting and intentionally hybrid moves that AWS has made is its partnership with VMware. I mean, that for me was really the tipping point of where AWS went from being a very public cloud-focused vendor to actually telling a hybrid story by partnering with VMware and easing the integration of workloads across sort of legacy workloads that are hosted on or built for VMware software, and bringing those into the AWS ecosystem. They've created a much stronger hybrid presence just through that partnership alone, I think.
Yeah, similarly for IBM as well. IBM is a little bit different in the sense that, it's really the first well-known cloud infrastructure as a service vendor that falls outside of kind of that top tier of public cloud infrastructure vendors. I think IBM has kind of come to realize that over the past year or so, and has really kind of doubled down on its hybrid strategy, both being included in hybrid environments, but also really focusing on its hybrid enabling story. And so here as well, and similar to AWS, the partnership with VMware has been really mutually beneficial for both IBM and VMware. I think they have already over 1,500 customers on their joint solutions as a result, and just allowing customers to deploy truly hybrid environments across their own data centers and vendor-hosted data centers, whether or not it's on IBM solutions, and being able to integrate with third-party technology is very critical. And for the rest of the slide, by and large, you see some SIs on that slide as well. And these vendors, Fujitsu, they most recently have essentially shut down their infrastructure as a service outside of Japan, knowing that they were having a really difficult time competing at scale with some of the more local and more global kind of vendors. So instead, they've kind of doubled down on their services approach and becoming part of hybrid environments in that way. So they might have a customer that has global operations with a center in Japan where they'll provide the infrastructure as a service, but also they'll integrate that with Azure infrastructure as a service and provide services on top of that, essentially establishing a hybrid environment for their customers. So the vendors more towards the right-hand side of this slide are really, really, doubling down on their partnerships, integrations with even competing vendor solutions, just to kind of stay atop customer mind share.
Mm-hmm. All right, and so with that, I'm going to hand this off to Jack to go through some of the really current performance of these vendors that we've been introducing.
Thanks, Meaghan. So if you look here, you'll see that Microsoft has really separated itself from the rest of the market when it comes to hybrid influenced revenue. And Meaghan has touched a little bit on one of those, that being Office 365. It's inherently hybrid because customers integrate Office 365 with their hybrid environments. And this can be something as simple as the Salesforce and Outlook integration, but this is more of a passive approach rather than Microsoft's active approach, which are integrations across its public and private versions of Azure, as well as between Azure and Windows Server. If you look more towards the vendor grouping, you'll see Salesforce is a notable vendor call-out here because its hybrid influenced revenue is actually internally led, and Salesforce aims to sell as much of its portfolio to new customers as possible. So they'll typically adopt Salesforce Sales Cloud, Service Cloud, etc., together to create a hybrid environment, and that runs parallel to Salesforce's ecosystem of ISV partners, which are one of the pillars to its go-to-market strategy, and Salesforce really relies on these partners to add value to its industry-specific offerings. And contrary to strong hybrid storylines like Microsoft and Salesforce, vendors such as AWS, SAP, and Oracle do not actively pursue hybrid opportunities, but have a broad presence in IT landscapes. AWS is deeply rooted in the IT environments of enterprises because customers integrate their workloads, enterprise workloads on AWS infrastructure as a service with large legacy workloads that are still on premises. And when you think about it, an enterprise isn't likely to lift and shift their entire IT environment, whether that's once or over time. So if they plan to move their entire environment or a piece of it, it's going to be over intervals, and those workloads hosted on AWS need to communicate with on-premise systems. So while AWS is not actively leading a hybrid strategy, as Meaghan mentioned, its partnership with VMware for VMware Cloud on AWS has been an exception. And this is, like she said, the most deliberate hybrid story to date for AWS. And similarly to AWS, SAP, and Oracle have large legacy businesses and are most significant. Their most significant contributors, are their legacy business. And companies running those legacy systems go through digital transformations and add new technologies, and those new solutions are integrated with those legacy systems.
So to kind of switch gears to kind of the other side of the hybrid coin, I want to talk a little bit about the hybrid enabling piece. So Meaghan already kind of talked about the differences between hybrid influence and hybrid enabling, but just to reiterate, here we're going to be focusing on the platforms, tools, and services, whether or not they're cloud delivered, that enable IT departments to integrate, run, and manage multi-vendor hybrid environments. And when we're talking about hybrid environments, we really want to emphasize that it can span multiple clouds, can span cloud and legacy IT, and it can span clouds that are hosted by a vendor or on a customer's premises, just as long as it allows for the flow and sharing of data across the assets. So the new normal IT environment, especially for a larger enterprise, is really a blend of legacy IT, public cloud, and private cloud. And as cloud, helps to kind of automate some IT processes, it's also created quite a few complexities. And, when cloud was first, becoming really widespread, a lot of IT departments were forced to basically go through some degree of layoffs. So now all of these complexities start to emerge and proliferate, and they have smaller staff to help handle all of that. So in my opinion, that was one of the most fundamental shifts that helped shape the cloud market kind of as it is right now. It was essentially IT managers and directors going to vendors and saying, oh, help, we need help linking all of these things. We want to get the most out of our data. We're being pushed to show return on investment and total cost of ownership, and we have to make the business case, and all of these different organizational and cultural reasons. We need you to help us with this, but oh, by the way, because, so-and-so that's funding this, really wants to see the benefits of cloud really shine through, we need kind of a cloud-like pricing schema. So with that, essentially, I think it prompted vendors to kind of innovate and evolve their portfolios and capabilities to kind of address this need in a more cost-effective, cloud-like manner. And I say cloud-like because some of the solutions are available through cloud subscriptions, and others are still licensed versions. And so I think it's interesting to call out, too, that we really look at this market in particular in 3 ways, each of which is separate but also complementary to the others. So we have cloud brokerage platforms and tools, which I think is the least understood aspect of this market, and that's really your kind of spans the spectrum of your orchestration tools and platforms, we've all heard the phrase single pane of glass, multi-cloud management, app performance management, those kinds of tools. That's really what we're looking at when we look at cloud brokerage platforms and tools. And there are a select few vendors that have really started to shine pretty bright in this space. Ingram Micro has done a very good job, benefiting, of course, from their acquisition of Odin and that platform and capabilities, and IBM as well with its acquisition of Graviton. Microsoft also entering the mix again through acquisitions of Cloudin. So I think that kind of underscores how this technology is out there and it immediately can address enterprise needs. It's just some of the companies that have this leading technology are small and haven't been able to, really expand their scale. So they make these prime acquisition targets, and I know Allan's going to get into that a little bit later. The next way kind of we look at this market is from a services perspective, especially cloud brokerage. So that's your consulting and managed services around these brokerage tools to help kind of, establish what you need, why you need it, how best to utilize it, and how to optimize your existing assets, but also make room for additional purchases. And then the last piece of this hybrid enabling market is your hybrid integration platforms and tools. I think this area gets probably the most attention, especially as Salesforce acquires MuleSoft, and more and more vendors are coming out with API platforms and integration platforms to help their customers better link their solutions with either existing assets or some of the upcoming new projects that they might have in mind. All right. So with that, so now we do want to move into some of the predictions that we have for 2019, but also for the next handful of years. Based off of what we're seeing in the market now, what vendors are doing, new product releases coming out, and as well as what customers are telling us. And I think that that's one of the most telling pieces is what are in customers' near to midterm plans. So, and now I will say, and just to orient you to the slide, these graphs and these quotes and what have you are part of a research stream that we do interviewing enterprise customers specifically. So one of our major predictions for the upcoming year, and it's not something that's completely new or groundbreaking, but we do expect a refined focus on it in 2019, is how customer decision-making is evolving to focus more on business outcomes and workload-specific business outcomes than delivery methods. And it's essentially making the public versus private debate far less meaningful than it has been before. Now and in the next year or so, it'll be way more about establishing a best fit environment, and that's starting at the workload level. And that goes back to what Allan and Meaghan were talking about earlier, on a project-by-project, workload-by-workload basis. As funding becomes available, you work on the next workload that you want to automate or modernize or whatever it is. Cloud versus legacy IT and what type of cloud are still considerations. I think they always will be, especially when you get into certain industries or regions. I mean, take a look at the public sector with JEDI, for example. There are so many different requirements that are at play. But the mentality really has shifted from an all-in mentality for one delivery method, like I want my entire IT environment to run on the public cloud in 5 years. That conversation has essentially all but gone away. And now it's more about choosing which environment is best for a given workload. There are a ton of factors at play. Customers are more knowledgeable. Vendors have come out with all of these hybrid enabling tools that make environments easier to manage and run. And I mean, we're even seeing, more acceptance of public cloud and public cloud vendors from the most regulated industries. I mean, I think AWS and Microsoft Azure are the two front runners, and the DoD's $10 billion contract. So that to me underscores a big monumental shift. And every day, there's another success story about how cloud utilization has saved a company X amount of dollars or gave an IT department X amount of time back. So lines of business are being pushed to kind of constantly improve their metrics, whether it's sales, marketing, operational, and they're looking to cloud too, which is bringing more potential buyers in the mix and really promoting these multi-SaaS environments that IT departments now kind of have to manage. And as that happens, at the same time, especially as more SaaS applications feature, analytics, functionality, and features, there's more data to be ingested and analyzed and used for those business outcomes, which is also prompting more of a multi-vendor infrastructure approach as well. And what we've really found from talking to customers is the willingness to work with multiple infrastructure as a service vendors, now more so than before, where you were kind of either an Amazon shop or a Microsoft shop. And this is on top of working with their legacy vendors as well. And what I think is interesting here is that a lot of the customers that we talk to, while they might not be there fully yet, their plans are for the next couple of years to really get into that multi-infrastructure mindset and organization. They don't want to be locked into one infrastructure provider, especially just in an effort purely to hedge against vendor lock-in, but also, as a disaster recovery measure in case there is an outage in one or more of their workloads or what have you. And I think what's really important to call out here too is that container and orchestration platforms like Docker and Kubernetes have helped this happen and will continue to do so going forward. And I think that's why we've seen so many vendors, even in the past couple of months, come out with early versions of their hybrid Kubernetes deployments. IBM and Google come to top of mind, bringing Kubernetes essentially into the customer's data center. I think that we'll probably see more of that in the next year or so. So there are a lot of reasons why, customers are going to invest more in cloud over the next few years, but also, utilize more unique vendors as well. So on that note, so customers expect to use more vendors, but none more so than for applications workloads in particular. Allan's already touched on it a bit, so I won't harp on it, but SaaS really is the overarching umbrella to a bunch of mini markets, each with a different buyer persona, a different need to fill, and a different use case. So that really underscores the proliferation of multi-SaaS environments over the next, I think, few years. Integration platforms and containers and pre-built integrations into these applications all make that possible. And now, more than ever before, customers have choice into which environment they'd like their applications to be run in.
Yeah, and I think this quote really sums it up. And again, this is something from our customer research that, it's very clear that customers are very astute about whether they're platform and infrastructure workloads are in a public or private instance, but SaaS customers are really more detached from the deployment model, and it's clear that they're focused on the functionality of these out-of-the-box SaaS solutions. And so it's definitely a very, very different dynamic. And so I think one of the most interesting things when we try to compare sort of the markets is just that it's not about functionality, or it's not about deployment models, it's about functionality. And so I think we're going to see vendors, SaaS vendors in particular, continue to compare themselves on the functionality and the value that they can add. They're going to do that in a few different ways. I think one very relevant development along these lines is Oracle's Soar to Cloud program, where the messaging is really about easing customers' migration to cloud applications, and the enhanced functionality that is provided by cloud applications versus on-prem applications, and also the positioning around making the move to cloud to really reduce the manual maintenance and upgrades necessary with sort of legacy on-prem applications. Oracle in particular is positioning Soar as sort of the last upgrade you'll ever do, not a discussion around move to our public cloud for the reasons of public cloud versus private cloud, or versus, it's definitely a cloud versus on-prem story, not a public versus private story. And so I think that's one really interesting thing we'll see moving forward. And so with that, we'll jump to the next slide, which is really a preview of the very specific 2019 cloud market predictions that we're currently drafting up right now and will publish in the next couple of weeks. And we'll actually do another webinar on these 3 predictions in February. So join us for that for a more in-depth discussion, but we have a few minutes, so we'll just run through sort of what those predictions are going to be.
Sure. Yeah, the first one looks at the acquisition activity that we believe will continue into 2019, and I think below the covers for a lot of those, there continues to be a struggle between, first, a lot of the acquisitions have been difficult to integrate, remain siloed in terms of operations and portfolio. So there's been a mixture of difficulties in terms of the integration, the large multiples for some of the acquisitions, I think, have been above what we would expect to see. So it continues to be a struggle for the cost benefit for continuing down that road with spending money externally, and so we'll go through more of the dynamic that we expect to see in the coming year there.
And we will definitely have a focus on the IBM Red Hat acquisition as well. I know that's gaining a lot of interest and is expected to close around this time next year. So we'll be keeping a pulse on that one for sure, and keep an eye out for pieces from us. I'm sure there will be more. And then our second prediction will be, around, and I think I already kind of hit on it a little bit, but around the whole idea of, best fit workload and deployment methods, how it's less about public versus private and more about, long-term goals of this workload and workload adoption.
And our third prediction kind of moves away from those two a little bit, but this one's on just sort of the evolution of artificial intelligence and some of the impacts there. So kind of building from the attention and traction that AI has gotten in the platform space, which I think has been, there's been a lot of noise about. Our prediction discusses a little bit about how, especially in the enterprise application space, the idea of applied artificial intelligence, where it's embedded into applications to really add specific and integrated value for business users. We will be talking a little bit about sort of the amount of SaaS growth in 2019 that will be driven by sort of AI-enabled applications to one degree or another. And so stay tuned for all those discussions in the next couple of weeks and in February. But with that, I think we'll move on to, I know that a ton of questions came through the queue while we were all talking, so we'll touch on a few, but also look for us to get back to you. If we don't touch on your question here, we should have your email for registration and get back to you. But I think just a really quick question around, someone asked, where does multi-cloud fit into your definition of hybrid? Just to be clear, so we really segment into hybrid cloud versus hybrid IT, but multi-cloud fits into that hybrid cloud definition where it's multiple clouds that are integrated to some degree in sharing data. So yes, multi-cloud falls under the hybrid cloud definition.
But if there are two clouds that are running in an organization and they're not linked, that's not part of our hybrid definition.
Right, at all, yeah.
And we do see some customers using, say, AWS for a set of workloads or a team, and a different team for a different set of workloads running Azure. That might be a multi-cloud environment in some definitions, but it wouldn't qualify as a hybrid cloud for ours. Right.
Our real key to hybrid cloud is that there is a direct integration and the sharing of data to some degree. So just wanted to touch on that one.
Another question came in, actually a bunch of questions came through about IBM, where we see IBM fitting in, but also how the Red Hat acquisition is going to affect IBM and some of its partners. So, we really see IBM as a strong contender in the cloud market, but still kind of outside of that top inner circle when it comes to public cloud specifically. It's just not, while they have the capabilities there so that they can offer them to their enterprise customers, that hasn't been necessarily their primary focus area. I think IBM knows that its bread and butter really is around the more complex integrations from a services point of view, as well as its private cloud capabilities, whether or not it's on a customer's premises or in IBM's data centers as a dedicated instance. So that's really where I see them fit. They definitely lead the dedicated cloud market in that regard. So, and that's through their own data centers and hosting customer environments. And then when you factor in Red Hat into the equation, so the language around the Red Hat acquisition is very interesting in the sense that this is the first time IBM's really called out that it's going to stay a standalone unit, so to speak. So that's interesting to me, especially because where it's being brought into the company in its technology services and cloud platforms group and then underneath that is its hybrid cloud group, that's where Red Hat's going. So it's essentially being brought into a services organization, but standing as a standalone unit. So from what I understand, they plan to keep Red Hat's partnerships intact, despite the fact that, their partnerships with SIs or with VMware or whomever might, be a conflict of interest. I think they're going to keep all partnerships as is. That's at least what I've heard. I don't know if the messaging will change over the next 6 to 12 months. I'm not sure. But I think that, Red Hat, one of Red Hat's conditions was to preserve the openness, preserve its partnerships and its relationships.
Mm-hmm.
Let's see. There's a question around, so for those multi-cloud environments and kind of the second cloud strategy around infrastructure as a service that we see a lot of customers utilizing, the challenge in managing two different cloud environments and how customers are balancing that with some of the benefits that they get in terms of ability to negotiate, lock in, those types of things. And we definitely, it does require additional training, certification, skill building within a lot of these organizations. That ties into a lot of the shift back to the importance of the IT department. And it's a challenge and an opportunity for them to come in and provide the skills to manage across at least 2 cloud environments in this case. But we have seen more investment required to send folks to events. AWS reInvent. We're talking with one customer who said, 6 months ago we were standardized on Azure, but want to have that second option. So they're sending folks to that event, going through the investment in training. But that is part of the challenge. It's much easier just to focus on a single vendor.
Okay. So there's another question that says, please discuss the relative market penetration or success of hybrid platforms. And then hybrid platforms is elaborated on as Azure Stack, VMware/AWS, Oracle Cloud Machine, and the new Alibaba offering. And so I think those are really hard sort of items to compare. There's a lot of synergies between Azure Stack and the Oracle Cloud at Customer portfolio, which Cloud Machine is part of. And then there's so those are deployments that are very much grounded in putting a tailored hardware box on a customer's premise behind the firewall and sort of deploying the same software that runs in those vendors' public or hosted private cloud instances behind that customer's firewall on that hardware. Whereas sort of the VMware AWS is a little more of a software play. There is some hardware in there, and Alibaba has a few different offerings, one of which is a very similar, it's really just the software that can run anywhere, so less defined than Azure Stack. So there's a lot of different offerings there. I think different vendors are addressing different problems that their own customer bases are coming to them with. But relatively, we've heard about a fair amount of success and traction of Azure Stack, particularly in disconnected or remote locations. Similarly, Oracle has seen some traction in regions that are restricted by data residency regulations and a lack of data center presence in those regions. So not sure we can give sort of a relative success, but I think that these vendors, the solutions sort of listed here, absolutely are serving discrete customer needs that these vendors are seeing come from their customers, and that they, particularly where you see sort of the Azure Stack partnership with the hardware vendors or the partnership between AWS and VMware, there's very much this admittance that of which vendors lead. This kind of goes back to the consolidation around the platform and infrastructure vendors. The vendors surrounding them are sort of conceding the hosted services and cloud management to those vendors, whereas those cloud vendors are content staying on the cloud side and partnering with the likes of VMware to enable these hybrid scenarios. So definitely a lot of different dynamics that play into a few different aspects of the market there.
I think another question came in as a follow-up to the IBM conversation. So the question was, would you say that private data centers will be replaced by hybrid clouds? My answer to that is no. I think the fundamental makeup of a hybrid cloud is, some sort of blend between public and private or what have you. The hosted private cloud market landscape is definitely consolidating and around a few vendors who still want to play and are playing at scale enough to succeed in that space, and the market opportunity is still growing. So I don't think it will be replaced. I think it's still going to be a core component of hybrid. It will definitely not be as big of a component as public cloud and never has been, but it will still be a critical component, especially for certain industries and what have you.
Okay, we're at the top of the hour. As we said, we will get back if you submitted a question with a response. We'll leave the platform open for a bit in case there are any more questions that trickle in, but I'll hand it to Sarah to wrap up.
All right, everyone, please feel free to reach out to the team with any follow-up questions. If you have a few moments, please fill out the survey on your screen and let us know what topics you'd like to see us cover in the future. A replay version of the webcast will be available after the event and will be sent out to you via email. To view a list of our upcoming and past webinars, please visit tbri.com. Be sure to join us next Wednesday, December 5th for Can Management Consulting Survive Digital Transformation? Thank you and have a great day.